Hey guys, what's going on? Hope you guys are surviving out there. Markets are just in turmoil right now with the tariff wars just kind of in full effect right now, or not kind of in full effect, they are in full effect. So we had the US announce tariffs yesterday, or actually, I guess it was 2 days ago, and then China announced their kind of reciprocal tariffs, and the markets are just not liking the uncertainty of what is going on here. So, stock markets indexes around the world are selling off. We got commodities selling off. Not very many bright spots going on right now. Although crypto actually today has kind of been holding its own. It's been moving kind of in step with the equity markets the last few weeks, but today we actually have Bitcoin up a couple of percent here. I guess depending on when you are basing your uh, reset time, but it's not down a whole lot, especially compared to the where the equity markets are at. So it's midday in the U.S. currently, and we got the Nasdaq down 5% today. The DAX in Germany was down about 5%. Nikkei down about 4%. So the indexes are just getting hammered. Silver down about 8%. Oil down about 7%. Not really a whole lot of bright spots except maybe for crypto here. So the market making strategy though seems to be just thriving on this volatility. Um, the day that the tariffs hit, the initial tariffs by the U.S., the strategy was actually up about 1.5% going into the end of that day, and then pretty much gave all its gains back once that happened, then ended up closing down a little bit for the day. But since then, it's actually been doing pretty well with this volatility. So I'll just show a quick chart here of kind of the trading results. So the 28 basis point loss on the first, we were actually up about 1.5% that day before it reversed. But since then, it's actually been doing all right overall. Since this 171 version has been up and running for roughly a week now, we're like flat almost exactly. Average day 0, and just like eked out a little gain here. So definitely an improvement though to prior to the 171 version. We're averaging a negative 60 basis point loss per day. So I think the regime detection that I've got built in here now at this point, while not super sophisticated yet or optimized in any sort of way, is improving things greatly by helping to limit some of the downside and dampen the volatility in kind of the equity curve swings that the strategy was previously seeing. So that is very encouraging. And then I've got my paper trade broker, which I've been kind of working on coding the last week or so, up and running. These results are from a live account that's just trading minimal position sizes. I'm still working through some bugs with the paper trade account, but I had Bitcoin and also Solana running in that account, and over the past 24 hours, and these are the results of that so far. So I've got some more tweaks I'm going to make to this thing. I'm hoping maybe by the end of the weekend I'll be able to kind of like release this thing out onto my production server and start using this as the kind of the source of truth for my um, testing statistics. So the other interesting thing is related to that is if we kind of take a look at, so this is the broker spitting out data um, related to the strategy that it's currently got going on right now. And so this is trading over the last 24 hours or so. So we can see the interesting things to look at here are the total P&L. So this is just the strategy itself, not taking into account any commissions or rebates. So we see $534 here. This is trading $100,000 notional value. These are rebates or fees from the exchange, so $200 in rebates. And then if we take that into account, the overall profit and loss is $742. And this is on 252 trades and roughly $4 million in notional value traded over that time period. So a couple interesting things to note here. One is that the rebates are making up a pretty large portion of the profit, which I'm a little bit uneasy with. I want to take a look at these rebates as kind of gravy or icing on the cake. You know, I don't like the fact that they're such a huge part of the profit and loss, right? Because we're getting a 5 or a half basis point rebate from Paradex, right? So if we go to the next, best exchange, decentralized exchange, which I believe is Hyperliquid, um, they're charging a 1 basis point commission on even on maker orders. So if we were to just say, okay, the P&L for the strategy is the same, but we're going to swap out the fees. Instead of getting a half basis point rebate, we're going to pay a 1 basis point commission. This goes from a plus 200 to a minus 400, right? And then our P&L drops by, 600. So we're only making $142 there off of all these trades. So kind of crazy, I think. It's like people, I feel like, tout that one of the benefits of crypto and decentralized finance and this whole ecosystem that's going to be or being built is like that costs are going to be lower than they are in traditional finance. And like this is total bullshit. Like the costs, if you wanted to go trade 100K in FX, right? You might pay $1 in commission, like at Interactive Brokers or whatever. And at Hyperliquid, which is one of the cheapest decentralized exchanges, you're going to pay $100 in commission to trade 100K notional, right? So that's like 100 times more expensive than traditional finance. So these cost savings are just not even coming close yet at this point. I think we're a ways off from that. Now, people might say, oh, well, with Hyperliquid, you got, your tiers. And so once you get to enough volume, then you're not paying any commission for, if you're putting orders into the limit book. But, at the same time, like say Interactive Brokers or any other broker, they also offer a tiered structure. So like $1 on 100K is their base, and if you trade a lot, you're gonna get reduced commissions off of that. So I don't know. This is the trade off with trading crypto, right? The thing that is attractive about crypto is just it's a very inefficient market. It's still very, very fragmented. So a lot of opportunities there for, finding either arbitrage opportunities or just anomalies that you could potentially take advantage of. Or just even like market making like this, right? You just don't have the same big players that you do in the traditional finance space because there's just not enough liquidity in this market for them to be interested in it, right? But at the same time, your friction costs are higher, right? So your commissions and if you're using market orders, your slippage, there might not be enough volume in the order book to trade the size that you want, like all these kind of drawbacks to it. So it's kind of a double-edged sword when you look at it and be like, oh my God, I can like arbitrage the difference between, the price on this exchange and the price on this exchange, or the funding rate on this exchange and the funding rate on this exchange. But then once you start taking those transaction costs into account, those opportunities don't all of a sudden don't look that great, right? So this is something I'm definitely going to have to keep in mind as I'm refining the strategy. So I said I really haven't done a whole lot in the way of optimization yet. I'm pretty much just looking at price action. I'm looking at a bit of order flow and order book imbalance to figure out where to place the bids in the ask, but not really optimizing this system yet for profit. So once I kind of get things stabilized, then I'm going to go ahead and take the next step. And the next phase will be, okay, how do we really optimize this thing to be profitable? Because like I said, the fact that, my rebates, at least in this last 24-hour period, are making up such a high portion of the P&L just is not making me feel warm and fuzzy. Because if Paradex decides at some point in the future, which they might, that the maker rebates are going to go away, or they're going to be reserved for only companies that are able to put up a certain amount of capital or trade a certain amount of volume, then the strategy might be dead in the water at that point. The other interesting thing I found with this is, like, I'm trading $15,000 position sizes for each lot, and so it cycled through about $4 million in capital in the last 24 hours. Now, if you look at Paradex's order volume for the last 24 hours on Bitcoin, it's about 56 million here. So, 4 million, that's like almost 10% of the total order volume for the whole exchange. So whether or not, like, if I were to trade these position sizes in real life at Paradex, would I see the same results that this paper broker is seeing is a huge question mark. The thing that the market making strategy needs is it needs enough people that want to cross the spread with market orders in order to be able to profit. And whether or not a single strategy can absorb $4 million worth of volume, or roughly 10% of the exchange's volume for that asset, is definitely a huge question mark. But anyway, so we'll see how the rest of this day goes. I wanted to just put an update out there just because things are getting kind of crazy, and we're still in midday here. So we'll see how things go into the weekend. I might have an update at the end of the day, depending on how the rest of the day goes. And we'll kind of see how the strategy ends up finishing the week out, given the huge amount of uncertainty now that is going on in the market. So anyway, I hope you guys are taking care. If you have any questions, comments, I'd love to hear how you guys are, kind of playing this whole scenario of what's going on. Drop a comment below. I'd love to hear from you. So if I don't talk to you before the weekend, have an awesome weekend, guys. See ya.